Aloha, this is Joshua Hayes with part one and the only part of tonight's commentary. We're going to be on September 25th, and basically, some people are going to say that we had a follow through day. Yippee! We had our first up day here, our second day here, and before we hit the new lows, we had a follow through day because the index was up 2%. My friends, I want to make this clear. Look at this downtrend, okay? Look at the downtrend. Do you think this move here is really going to end it? The V-shaped move after a heavy volume sell-off. As you can see in the final leg of the sell-off, there was heavy volume. Now there's a pathetic follow-through day where volume is well below the moving average of time segment volume and of the money stream moving average, excuse me, line the 50-day moving average. So that just proves to you it doesn't look good. I mean, it's one of the weakest fall through days you can ever come up after rallying off the bottom, and even on a weekly chart. I mean, all you do have one nice super candlestick pattern, but the overall effect, I mean, we might be bottoming because this might be a sneaky bottom to avoid all the people that use IBD. But let's look at some of the others. Let's look at the NASDAQ compared with the New York Stock Exchange. Let's see how that looks today. Look at that pathetic movement. I mean, look at how much it took back from the highs today. I saw the market after the day, but I looked at a chart service that shows me intraday charts, and I saw how far up these charts went and how far they fell. And the NASDAQ was the most obvious one to me right off the eyes. But if you notice on today's volume, besides the gain being only 1.43%, making it one of the weakest, probably, rally attempts ever from a bear market that's lasted this long, that's been this ugly with that much volume selling off, it had to be the worst one ever. I forgot my train of thought was going, but that normally happens with somebody that's got the problems like I do. I can't keep my train of thoughts on track. But bottom line, the NASDAQ failed just like the New York Stock Exchange. The NISI looked better, but how can you call this day a follow-through day unless you're just using technicals of science and not using the art? Volume was only 1.181 here, 187 here. So volume was barely above the volume the day before. It wasn't like here whenever volume was 199 and then all of a sudden 272. So 200, who knows, 27 billion, I don't know. I think that's like 18 billion, it might be 187 billion, I don't know. The bottom line is that pathetic, just pathetic. Now let me go to the S&P 600 and see what we look like there. Once again, after it's decided to go below the 50 and 200 day moving average, it can't get back above it. And notice the ugly reversal right at the 200 day moving average. The S&P 600, which was trying to lead the market at the very end before the market finally gave up on the leaders, had a failure right through the 50 and 200 in one day, failed even more at the 200 day, and now tried to rally back to the 200 day moving average, failed, and now it has an open candlestick, but the downtrend is still alive. And as you can see from the 2007 highs, I mean, the S&P 600 is just as ugly. It topped I think a little bit earlier than the others, and it's only down 15%, but it'll get its comeuppance soon. You got to look at the NASDAQ and see how much the NASDAQ is down to know that if your broker's been telling you, because I've been telling my family not to buy stocks. Do not buy stocks on the downtrend, and they're actually listening to me. But some of them are screwed where they get the employee stock purchase program, and they end up having more crap stock than good stock. So basically, instead of getting a $26 fix to get like $24, but then in 5 months later it's like $19. Oh, way to go, you just got ripped off. But anyway, you see the NASDAQ here, you see the New York Stock Exchange, and I want to now look at Washington Mutual. I was telling everybody, if you got out of this stock when it even death crossed for the very last time, if you even got, I mean, if you followed this voodoo this voodoo art that I do called technical analysis, I want to show you. This was the last right here, death cross. It's had many death crosses leading up to that point, as you can see along this chart, and then you can see it had a final death cross here. On this breakdown right here on heavy volume, if you would have sold and just admitted that you were wrong on it, you could have taken a 0.5% loss, and that was back in August of 2007. And since then, you can see on the daily, it never once got even to the 200-day moving average. And so instead of getting out at, I gotta go back because I can't remember. So instead of getting out around $40, you end up holding Washington Mutual all the way down. As you can see, can't even touch the 200-day moving average, proving once again that this works. And now Washington Mutual, as we have learned, has been taken out tonight by, I believe, oh my gosh, JP Morgan. JP Morgan's taking out Washington Mutual. So that's Joshua Hayes at BigWaveTrading.com. I want to show you the pathetic follow-through day and show you when the Washington Mutual that's why this will not exist. Thank you very much for watching. I appreciate it. Aloha.